So we have Home Depot in the news as they have just released their fiscal Q2 earnings, which look to be very good. They are also in the news with a lot of other big box retailers who are also releasing earnings this week. And also in the news because actually they are doing pretty well. And there's a lot of structural reasons why this is happening. So I want to go through all of that in this video. And let's start with Home Depot's Q2 results, which are pretty good, I must say. So actually, yesterday, we saw a report out that showed that there was a 35% increase in foot traffic to Home Depot's stores. So the share price rose on that news for obvious reasons. You have more foot traffic, that means more customers. So really, the market was expecting some pretty good numbers in terms of revenues today. So here are the Home Depot Q2 earnings. So earnings per share, $4.02. That beat expectations. Expected was $3.71. So a very good and decent beat when it comes to earnings per share. Revenue, $38 billion versus $34.5 billion expected. Comparable sales, this is where the big jump comes. They surged up to 23% versus 10% estimate. So they doubled the estimate of comparable sales. And for a big business like Home Depot, that is a very, very solid number. And it actually was expected this week, along with a lot of other big box retailers. So Lowe's, Walmart, and a few others, even Target, all expected to be doing pretty well. And the share prices have been very strong for all of these companies. So according to the report, the e-commerce business is booming, and also curbside pickup is also now available in pretty much all of their stores. So here's my take on those numbers. The sales are absolutely astounding, doubling estimates. And the estimates were high, 10% comparable sales, but they went 23%. And that is a very good beat. If you look at the revenue, the earnings per share, especially the earnings per share, it isn't a massive beat. It's still a very good beat compared to what was expected, but not as much as the sales. Now, Home Depot have actually given some reasons for this. So firstly, higher wages of the staff that were working in the stores. Also, apparently, according to Home Depot, they expanded sick pay benefits for employees, which cost Home Depot an extra $640 million. And to be honest, I think that's okay. That's not structural. We know everything that's going on right now, and businesses are just different. Some businesses are benefiting from this. Home Depot is one of them. Some businesses aren't. And some costs that are occurring right now are short-term and not structural. They're not going to be costs for the businesses going forward. So it's good results, and it shows a wider move actually to big box retailers in general. So I just wanted to highlight this that was actually last night on Jim Cramer's show on CNBC on Mad Money. So he was saying that he expects unbelievably positive numbers from these retailers this week. Those were his words. And we've seen from Home Depot's results that he was pretty much right. So he's looking at Target, Walmart, Lowe's, and Home Depot, including just more big businesses and big brands. And really, why is that? Well, it's not because they are creating new market share. The economy in general is contracting, not growing. So what is happening here? Well, essentially, and this goes for Home Depot as well, they're taking businesses away from small and medium enterprises, mum and pop outlets who unfortunately just aren't here anymore. They're going bust. People that used to use them now can't because those businesses don't exist anymore, which is extremely unfortunate for a lot of people. And the takeaway from that is that big businesses that have massive balance sheets and the ability to borrow money at the current rate of 0 really are benefiting from this massively. Not just Home Depot, but we've seen Amazon, really the biggest winner of all, but Lowe's as well, Target, Walmart, all of these big box retailers, the big names, big balance sheets, and the ability to just stay afloat during these times. And so they are all benefiting from this structural change of small businesses going out of business. And that is a big chunk of market share that they seem to be picking up right now. Home Depot also has the added benefit of being the recovery play. And obviously we know some big structural changes are happening right now in terms of the way people work. Some people may never return to the office. They know that they can work from home now. Some people may be 50-50. There are going to be more people working from home, doing home improvements, either building out their home offices or just being at home more often and wanting to improve their homes. And so Home Depot are going to benefit from this, along with Lowe's and some other retailers as well. Looking at the share price right now, so the share price is up about 3% pre-market as of filming this video. By the time it comes out, the market probably would have opened and we'll see how it's trading, but it's probably going to be up. Yesterday, it also went up, the share price, because of that news of the higher footfall. Currently about a $300 billion market cap. And there's just strength in these numbers, more people coming in and spending money. Now, when you look at Home Depot versus Lowe's, and these are very similar, although they're different. Home Depot is more structured towards professionals, Lowe's more towards the DIY crowd. Actually, over the last 3 months, Lowe's is up about 35%, Home Depot up about 21%. And actually, Lowe's is a smaller company overall. The market cap of Lowe's about 119 billion. Home Depot, as I said, about 310 billion. So, and I want to highlight here something from Bank of America, who wrote that the reliance on professional customers puts Home Depot at a disadvantage relative to Lowe's. About 45% of Home Depot sales come from electricians, contractors, and plumbers. And obviously, during the health situation, all of that business seemed to definitely dry up a little bit because obviously they couldn't be going in and out of people's homes to do this sort of thing. However, the recovery play, now we're coming out of this, we could see even more business go into Home Depot despite the very good sales that they've had already. According to tipranks.com, Home Depot is a moderate buy right now. From all the analysts surveyed, there are 15 buys, 8 holds, and no sells. The consensus price target for the stock is $283. That is actually below what the stock is trading at the moment, but certainly don't take these price targets as rote. It's really just a very general sense of what analysts are thinking, but they have it as a moderate buy. It's a solid company and these numbers are good. So to wrap up, really, Home Depot, is looking to capitalize on a couple of things. The first one is more people improving their homes for various reasons, either because they're working more from home or just because actually going out isn't really an option these days, and so the energy has to be spent elsewhere, maybe on DIY or just improving the homes. And the second reason is really as small businesses just are no longer here and go out of business, and so people have no choice but to turn to big box retailers like Home Depot, Lowe's, Target, Walmart even, all really doing well from this, and other big brands as well. So some positive numbers from Home Depot, not a surprise though. It was expected for them to blow out their numbers, and they did. The comparable sales was incredible, doubling estimates. So there is a lot of positivity for Home Depot. Not just now, not just the past in which we've seen they have had some strength, but it looks like going forward, all of these structural issues really pretty much are positives for Home Depot. We'll see if they can keep those costs down and really take advantage of the greater market share that they're going to be taking away from those businesses that have gone bankrupt. Yep, so some structural changes and it looks like it's working. That's it for this one though on Home Depot. Hope it explained it well for you. If it was, please just give me a subscribe and a like on the video. It helps out a lot, and I'll see you in the next one.